Oh, my name's Dr. George Mochocki, and welcome back. This is a series you're taking me in a class, either an online or face-to-face class, on understanding business functionality and different disciplines. And today we're going to be talking about the banking, or what we presume is the Federal Reserve System. And before I go into a quick overview, there's a lot of stuff going on with the administration, President Trump, and powers and everything else. The Federal Reserve, as you know, a lot of people think is part of the government. The Federal Reserve is not part of the government. The Federal Reserve is a bank outside the government. The president has ability to nominate certain individual board of directors on the Federal Reserve with certain approval of the banking system, for lack of a better word. So it is a separate entity outside of the government. The Federal Reserve is basically the third bank of the U.S. government, third bank of America, for lack of a better word. They put the name Federal Reserve because the first two banks were repealed, that issues with everything else, so the government eliminated them and started all over. So now the Federal Reserve, in a nutshell, I'm giving you a little bit of history. Look it up and you'll see. Okay, so now the Federal Reserve is a separate entity. It basically has the ability of printing money. It prints the money. It gives the money and everything else, the banking system for the government. The government goes to the Federal Reserve and says, hey, I need, or a bank system, I need some additional cash. It'll either give it you it'll print some additional, it'll print money that's approved by Congress and the Senate, how much they could print, and then basically now it gives working capital for the government, but at a cost, and the cost is the interest rate or the prime rate that the Federal Reserve or the banking system charges the government, and so this way now for creating this currency that is utilized as a tenure. Now remember, going forward, in the future, and this is what I find this interesting. Remember, what you're reading now, it just gives you a basic understanding. But look at the future. You have Bitcoin, you have e-commerce, e-currency, everything else. Now, very few people carry any kind of cash. I just use my debit card, and I don't see the dollar. It's just units. Eventually, I'm not a predictor. I'm looking at the future and what other people are doing some research. Eventually, the federal government or the banking would just rather have you forget the money, just do everything else through credit card or debit or unit in the future. You don't have to print anything. You can control. Now, the reason for this going forward, using your MasterCard or debit or Visa or whatever, is now the government could track, or someone could track your how you're utilizing this currency or medium that we call dollars. Okay, all right. So here it is, Federal Reserve. So we're going to be talking. I want you just to understand basic Federal Reserve. And let me click on here. Jerome Powell is the 16th chairman appointed by President Trump. Okay, what's money? Really, money is just anything that people accept as a currency. So instead of me saying, hey, I've got this coffee cup here, and you've got this flash drive, how is the value? It's kind of hard to break. I think it's only worth a half of my coffee cup. So basically, they use the currency. That's all a dollar says. This is how much value this flash drive is worth $20. This cup of coffee, since it is supposed to be a good one for long, is worth $25. So you don't have to worry. You're going to say, okay, we'll just take I'll give you $25 or this medium, and I could buy certain things. That's all it's telling me what money is in a nutshell. And if you look at the videos and if you look at the reading, that's what it tells you. Okay, so instead of bartering, give you standards, portability, everything else. Bitcoin going forward, a lot of people could invest Bitcoin and look at Bitcoin is like what's the value of the dollar? You have inflation, the dollar loses its value. Comparable against other currencies, other reserve systems or banking systems within the global system, and it's the same thing with Bitcoin. I purchased it for, let's say, maybe, I wish I would have purchased some Bitcoins for maybe $50 for one Bitcoin. Now to buy one Bitcoin, maybe $5,000. I'm just making up the number. You see how the price or the value went up. Could you now, when you're looking at value and inflation, just because you have to buy more money, you got a raise, but inflation went up, do you really are making out? So my house is worth $350,000. 50 years ago, it would have been $25,000. You go, oh, wow, look how much value, everything else, but inflation. So what's the currency worth? What's the value worth? All right. So anyway, you got Bitcoin, money supply. We'll talk about money supply, right? M1, the thing you got to remember. M2 is what you use for economic calculations. The book did a nice job about everything else. It tells you went back and forth, global exchange rate, how much is our dollar. Remember, right now the U.S. Dollar is the reserve currency for the global. So when I look at the global IMF and they're looking at people exchanging currency, you need some kind of a base. What's the base? And basic is the U.S. dollar. So if the U.S. dollar is strong, it works out well for me because I could buy more stuff. But it hurts me because I just want you to understand the concept. It hurts me if I get a strong dollar, is that I buy more stuff. But when people want to buy my supply, imports and export, it basically costs them more because my dollar's strong. So China it manipulates some of its money, their banking system, because what it does, by keeping their yen cheaper or lower than the U.S. dollar, I could buy more Chinese good. Now, Chinese people or people from China want to buy U.S. goods is because the yen is weaker than the U.S. dollar. It costs them more yen to basically buy U.S. goods. So most people are looking at goods, they say, hey, we're going to buy it from China. You know what I mean? Because of the cost. All right. So the value, rising dollar, this is what this talks about, the Federal Reserve System. Okay. Now, how do you know if we're in inflation or a recession? If I look at this Federal Reserve System, let's see if I have the member system. Federal Reserve Chairman controls that. The board, the governors. Okay, we got Federal Reserve part. I thought I had a map here. Policy. Oh, there it is, the map. I knew I would have a map. Okay, so if I look at the map, here's where we're looking at. The Federal Reserve is an average. We are in the Federal Reserve District. Chicago is basically in District 7. So if they're looking at unemployment, they're looking at inflation, they're looking at different indicators, and they're going to say, okay, in the Chicago Federal Reserve, we're experiencing a recession. Now, San Francisco said we're not experiencing any recession, we're experiencing growth. Now, the Federal Reserve of 9 said, no, we're seeing a recession, or we're seeing a growth. All right. So if I'm looking at this, they take an average, and they take an average of all these different districts, and they come back. It's almost like your grade. What's my average? I had an A here, I got a B here, I got a C here, I have A. Overall, my grade point average for this class is a B or an A. And the same thing with the Federal Reserve. So when you're looking at the Federal Reserve, when they say we're having in a recession, look who's saying that. If you're saying California, we're having a recession, okay, and we're saying Chicago, we're saying, okay, that's two democratically ran areas, areas predominantly, and they're having a recession. But now you have Minneapolis, you got Kansas, you got Dallas, you got Atlanta, you have Boston. They're not having a recession. They're seeing growth. So you're going to say overall the U.S. economy is not in recession. It's seeing growth. All right? It's an average. That's all I want you to understand. Okay, now what you have to understand for the exam or anything else, the Federal Reserve uses three tools. The reserve requirement. The reserve requirement basically tells the banks you have to have so much money. See, I got it in yellow. So much percent of your funds in your checking and saving has to be held in reserve. So if I say out of all your checking and saving, 1% has to be held in reserve, okay, that's 1% less I could have available for people to borrow money from me. Now, That's in case there's inflation. I want to slow down people's spending. I raise the reserve requirement. If I'm going to recession, I want people to spend more. I want to stimulate the economy. I lower the reserve requirements. Now I have more money to put back into the system. All right, open market and basically just selling it and increase the supply. We'll talk about the discount rate or the prime rate. If I look at the discount rate, if the prime rate, if the Federal Reserve lowers the discount rate, that's my supply for the bank. Lower the discount rate, that means if I get it from the Federal Reserve at 2%, it's my supply. And now you want to borrow money from me, am I going to give it to you at 2%? No, that's what I paid for it. I may say you're a good customer, 4%. I'm making money on that. You're a high-risk customer, 8%. You're a really high-risk customer, no credit, any credit, brand new out of school, 21%. Do you see I could control that? So I paid 2% for it. I'm giving it at 20% so I could control that. All right? Discount rate. This check clearing roll, it's not doing my, because everyone's doing it to a debit and a credit card. We're doing very little with a check clearing roll. Okay. Now, banking system, commercial banks, savings and loan, credit union, non-banks. All these are part of the stuff that's under the banking system. Commercial bank. Okay, now you have two types of customers, right? Certificate of deposit, time deposit. Remember, we're looking from a business perspective. So if I'm looking at time deposit, is basically a saving account that you have. If you're looking at a demand deposit, it's what we call a checking account. Two types of customers we have: depositors or borrowers, and commercial banks, and it's breaking down profit organizations seeking to make money. And they make money by lending money to you. Real quickly. Okay, savings and loan. I'm not going to go into that. You got credit unions, right? You got non-banks. You have insurance companies now could basically give you a loan. They have all this. So everyone's involved in this. Anyone's going to make money. And so if you're looking at it, shop around, see which one gives you the best thing. Now, sometimes you could look at a bank that's not here in the U.S. It could be from, let's say, from London, the Bank of London, and they get a better return. They may not have the money. If the Bank of London, right now we have, we're protected underneath here by a certificate of services, online banking. Here we go. Protection. Here we go. The FDIC. I forgot. Federal Deposit Insurance. This one here is savings and loan, and this one is national credit. Now, even though they may have insurance, but it's insurance by that government. So if the Bank of London goes under, you may lose your assets. You have to wait to see how they pay out. And usually they'll pay out their own constituents, the people from the UK, before they would pay out, I would think, people outside. That's just my look at the terms and conditions. It's a finance class, all right? Okay, future of the banking is internet banking. That's where we're at. Technology, credit card, debit card, driver's license, my smartphone. Pretty soon you'll just basically have, I don't even have to have my card or wallet. I just tap it, and it basically will deposit or take the money in or out. And so everything else is going more electronically. It's less and less cash. It's going to be a unit, for lack of a better word. The future is here. I'm teasing you. In international banking, letter of credit, money exchange, World Bank, International Monetary Fund, and make sure you know the difference between the World Bank and the IMF. And money exchange, okay, currency. I think that's what. Let's see, did I cover everything? I think I covered everything else. Just a quick overview. I know I bounced all over, but there's a lot changes, a lot happening. This gives you a quick overview of the banking system. Remember, the banking system is a separate entity. It's not part of federal government, or is it? Because of COVID-19, the U.S. Treasury took over the Federal Reserve. It is under the umbrella of the U.S. Treasury, so it is part of the government now. After with the powers and everything, because of this pandemic and everything else, once it reverts back, it may go back. Or will it change? Because I know there's a lot of changes. Do you want to audit the Federal Reserve? Right now, remember the dollars and everything else we have. Who's it backed by? the U.S. government. Even though it says in God we trust, it's not backed by gold, it's not backed by silver, it's not backed by any commodity. And the reason that the Federal Reserve went into that, real quick, my last thing is because if it was backed by gold, you had to have so much gold before you print more currency. If you didn't have any gold backing it, you couldn't print any more currency. Now, it's like I would call monopoly money or fiat money. Backed by nothing. It's backed by our output. But I still know that if I have a dollar or what they call the petrodollar, it's backed by the oil. We are the number one energy producing in the world now. But we're moving away. I know President Trump, or the indication and everything else, that he's pushing away from this fiat money and wants to go back into a solid or gold backing or a commodity backing. A commodity backing, either silver, gold, silver, something that may, it doesn't, its value is what the constituents or people think the value of that commodity is worth. Now, be careful about derivative finance. Take me for finance, or take a finance guy. Be careful about buying gold that's backed by China. Remember, because 25% of the Chinese reserve gold was backed by their banking system, and what we found out, it's fake gold. It's gold plated with copper in the inside, so 20% of China's gold may not be real gold. You have to look at the gold, at least you know that's in the U.S., as well as I know it, it's still solid gold, 199%, or you buy the gold thing, and you could trade Bitcoin, gold, internet banking, smartphone. I think Google's trying to get into it. Apple's trying to get into the banking or having their currency. Remember, currency is just some medium that you think you could exchange for something else. Why does the government not like the Bitcoin? Or why are they trying to get rid of paper? If I'm doing something illegal, I pay you cash. Psh, you never know it. I pay you Bitcoin, you never know the transaction. If I'm using my debit card, credit card, everything else, they know where the money went. They know how the money, they could track your spending, and they could basically, they're not worried about too much spending. Give me my share of taxes. All right? Again, my name is Dr. George Mochocki. This is a quick overview about banking. And remember, when you look at banking, we look at the Federal Reserve. One real quick thing, if you're taking the exam here at the schools I'm teaching, when they talk about the Fed, they say the Fed, they're talking about Federal Reserve. If they talk about the federal government, they say federal government. When they say the Fed, what three tools they use? They basically use, the three tools they use is the reserve requirement, open market, and a discount rate. Those are the three tools that the Federal Reserve or the banking system utilizes. The government's tools, they use spending and taxes is basically what they use to control the economy. I want to stimulate the economy, I reduce the taxes, I reduce my spending. I want to slow down the economy, I raise the taxes, I raise my spending. Do you see what I'm talking about? Same thing with the Federal Reserve, the banking system. They want to slow down the economy. That means take money out of the system. They basically raise the reserve requirement, raise the discount rate, and sell more security. They want to put money back into it because of a recession and stimulate the economy. They lower the discount rate. They basically buy back their U.S. Treasuries to put the money back into the system, and they basically reduce the reserve requirement. In a nutshell, again, my name is Dr. George Mochocki. I'll see you for I think the next series, we're going to do some personal financing, a real quick overview what you should look out for, at least from a college student perspective. All right, I'll talk to you later. Let's see how long my recording was on this one, real quickly. 19 minutes. I'm going to need my 20 minutes. Again, thank you. Stay safe. And remember, keep an eye. I'm just whetting your appetite. YouTube it, search it, the financial. There's a lot of different podcasts. There's a lot of different things I'll add on, going over some good ones that you could look at YouTube. They could follow out. They're credible. They're CPAs. They're individuals that will at least give you the facts. You still have to make that determination. Remember, it's up to you what's going on. Don't listen to one source. Don't listen to the government. Don't listen to the Federal Reserve. Don't listen to the mainstream media. Don't listen to one individual. Listen to a variety, internal, external, and that's how you become awake. That's how you become to see what's really going on. That there's no smoke and mirrors. I understand what's going on, and you still could lose everything, but it's the gamble you're taking. All right. I'm joking around because remember that you're just minimizing risk. That's what in business we call minimizing risk. And if you got money, though, you're better off keeping it into the bank. Which one's going to give you more money? But you have to look at the terms and conditions. Now I'm over my 20 minute. Bye.